Okay, guys, so the market just opened. We're looking at Palantir here. We're going to see if this breaks this bar. Oh, it just broke it, so I'm going to buy some. I think I'm going to do 400 shares at first. Alright, with $12 in the profit, that's good. $28. Alright, maybe I'll get some more, just to kind of even it out. We'll do 1,000. Oh, well, yeah, I'll do 600. Alright, now we're in the negative. That's okay. I can work with this. See, this stock was overbought on market open. We discussed this in the Discord chat room, that the stock was probably overbought and that it was going to come down, giving us a big red bar, which it did. Some that are trading with really small accounts, a couple $1,000, couple $100, you know, even like $50, they can't get in the way that I get in on my position because they don't have as much capital as I do. So what I'm going to do is basically explain what I'm doing here. I got in it, you know, as you seen earlier, right at market open, expecting that this is going to happen, and basically leverage my way in until it finds the bottom, because no matter how good you are, nobody knows where the bottom is going to be at. It's just a fact of life when it comes to stock traders, trading the stock market. No one knows where the bottom is. So when you see stocks start going down and you start seeing the red bars, if you're a day trader, what you'll do is you'll get in at market open, where, whenever you're ready, wait a couple minutes, see what the stock is doing. It goes down maybe 30, 40 cents, buy a couple more shares. It goes down another 40, 50 cents, buy a couple more, just keep leveraging yourself in. As you buy more shares, your overall price, where mine is, for example, here 1,000 shares, and I'm in the whole $538. That price at $24.73 a share will start going down. It might go down to $24.50, and then on down to $24.30. As you leverage in, your buy-in price will go down as well. That's how you leverage yourself in to find a good spot. Then you start seeing the stock making a recovery, and you start seeing the green bars. Then you start buying some more at a more faster rate. That way you get closer to the bottom lowest price point possible. And that's what I'm doing. I'm just riding this thing out. I'm just waiting until it finds its bottom. And see, it just had a little pullback right there. I might go in right there. No, see, looks like it wants to keep going down. Now, a lot of you guys have messaged me and, my Facebook and stuff, and have asked how, when you've never done this before, and you're interested in getting into day trading stocks, how do you find the right stocks? How do you do that? Well, all this stuff's on the website, $Monster.com. That's my website. And I explain it all in there. First of all, you need to have a broker's account, preferably Robinhood, because they're very easygoing for brokers, and they're very forgiving as a new investor and whatnot. So, and plus their platform is so easy to use if you're new to this, and you don't know, something like E-Trade or Interactive Brokers or something like that. It's like or something like this is even way too complex for you to wrap your head around the charts and graphs and whatnot. Robinhood is very simple. It's very easy. A 3-year-old can use it, okay? My 8-year-old niece uses it, okay? It's so easy to use. And plus, they are really good on fractional shares. And plus, you don't have to have a whole bunch of money. I mean, you could get started with $100. You know, now, regardless of how much you can afford to invest in, just please always remember, like, rule 101 of investing: never invest more than you can afford to lose. If I walked into your house right now and grabbed a $10 bill out of your wallet and set it on fire, would it ruin you? No. I mean, you'd be mad that you lost $10 because somebody, burned up your damn money. But, you're not going to end up homeless on the street and destitute, for over $10. You might punch me in the nose, but, that'd be it. Opposed to me coming in your house and grabbing a stack of $10,000 cash and throwing it in your fireplace. Now, would that really? Okay, then. That's what I mean. Like, don't invest more than you can afford to lose. Some of you guys out there, went in today and did just that. You got your Robinhood account, but you put all $10,000, your entire life savings, into your Robinhood account, and then traded with that entire $10,000 and lost it all. So, I mean, you got to be smart. You got to remember that this is not Monopoly. This is real money we are playing with, and if you lose it, it's gone. Somebody else at the New York Stock Exchange is holding on to your money. I'm about to get in here. Okay, I just put in 50 shares. Oh, it looks like it wants to go down some more. I'm thinking if it gets down about another 20 cents or another 15 cents, I might go in. Well, I don't know. It's kind of... See, the volume is dying off on this second bar right here. And, we're only 4.5 minutes in to this session bar, and it's slowing down. Huh. Now, this is something else. I'm looking at something else. This is Wendy's. Reported good earnings report yesterday, but you see it's kind of sideways in that channel. It didn't really spike or anything. Well, sometimes that happens. The first day, it'll go up good, and then it just stays in, it just goes sideways, just bounces up and down. But then the next day, today, look at it. It's jumped up already over 3%. It went up 3.7% yesterday and another 3% today. So all in all, if you bought yesterday morning, you made almost 7% return on your Wendy's investment. Some of y'all held on overnight, which, if you're comfortable with doing that, that's fine, but it's, if you're a newbie investor, do not do that. That's very risky because anything can happen overnight and the whole market changes and you wake up the next morning and the stock's tanked. Like, it's kind of risky to do that unless you're really sure and confident with what you're doing. But if you made almost 7% return on Wendy's if you sold just now. Alright. We're currently down in the hole here, $926, $950. And you can see how these bars are really slowing down, right? I think we're getting close to the bottom here. I'd say around 24.50, 24.60, it will probably be the bottom. Oh, no, it wants to make a little pullback. I don't like it when you play with me like this. Come on now. I just need you to break this bar. Just break that bar for me. That's all I need. Break that bar. Nope. It's going down. See, 23. What did I say? 23.60, 23.50. I think that's the bottom. I think that's the bottom. But you can't never be sure. It is still up pretty high from its previous. Oh no, look how it's pulling back so fast. I think that was the bottom. I think I missed it. See, sitting here talking and running my mouth and not paying attention. Look, now we got a green bar. That's good. That's good. Good sign. Good sign. Come on. Come on. I know you want to do it. I know you want to do it. Come on. God. Why is this thing so slow? See, all we needed to do is break the top of that red candlestick, that top part of that wick. If this green bar breaks the top of that wick on that red candlestick, then we got us a good signal. We got good things about to happen. Nope, it's trying to pull back. Oh God, don't do that. Don't do that. See, it's trying to play with us. See, it's trying to play with our emotions. You got to remember that, you know, sometimes the stock just doesn't play by your rules and doesn't do what it should do. I've seen stocks tank that had beat earnings estimates, beat the revenues estimates, you know, beat everything across the board, delivered on forward guidance, and still stock tanked. But 9 times out of 10, when a stock does that, and you know it's a great earnings report, but it just tanks on that whole day, just tanks. It's usually because investors are selling. They're all, you know, cashing in on them good earnings reports, and they're just selling. Of course, lots of those people bought days, weeks, months before the earnings report was released, so